We're now in the new and revised auditing reporting standards section. We have about 4 questions, and inevitably there may be some overlap. Natalie already has a couple of nuggets before, but by all means, if you want to repeat those, please do. We have lost one of our members. Martin has had to drop off. He sends his apologies to you all. So we won't be hearing from him, unfortunately. So what are we trying to do here? As I said in the context, we're trying to understand if our intended purpose and benefits that we set out to achieve when we made all these changes to the reporting standards have been achieved. If so, fantastic, but is there more that needs to be done? And if not, what more can be done to get us there? So these questions are framed with that objective in mind. So if we kick off again and fast track, question number 6 on your cover note reads, is the information provided in the new auditor's report useful, and in what way? And then, has the new auditor's report increased your confidence in the quality of the audit performed? Now, I recognise that we do have some practitioners here, but obviously you will have engaged with audit committees and when you have been able to with users as well. So by all means, feedback from that is just as important in this section. So I've got the participants up and ready, but Pamela, as always, just raise your hand. I know that you can't see the raise hand function. And Henry, I mean, I know that your world is accounting, but anything you can feed back in this area is always useful too. Pamela, thank you.
I thought I would kick us off. I think the questions that are posed are quite rightly written for users. And I am not a user, so I'll give my perspective from what I hear, but I am very interested to hear what users think. And again, I should note that I'm coming from the UK, and the UK experience of audit reports isn't quite the same, and it's been going on for a bit longer. So audit reports generally, key audit matters. I think personally that it's a very, very welcome inclusion and development. It gives a lot of information about what key things that the auditor's been focused on. Having used key audit matters for a long time now, since about 2013 in the UK, we've found that in practice, what makes them the best and most informative they can be is being very specific to the entity, talking about how the level of risk changes over time and the inclusion and exclusion period on period, talking about levels of estimation uncertainty and linking to descriptions of that. And also in the UK, we as a firm try to engage to give findings that are quite qualitative, and give a view of what the auditors found. We in the UK would like that to be mandatory because it is quite hard to get that out there, and we have heard from users in the UK that they value that. What I think, to my mind, doesn't help is asking for something like key observations without being clear what that means. That doesn't lead to high quality reporting in key audit matters. I have more to say on other parts, but I thought that might do to start us off.
Yes, actually, that's really helpful. Pamela, perhaps for other participants who may not be aware of KPMG's trailblazing on graduated findings, you could just give a very brief idea of what that is so they can talk in that context.
Yeah, absolutely. So graduated findings is what we call essentially a system that takes, let's take a provision, so there might be a key audit matter on a provision, and then after talking about the risk and the procedures that have been done, it would come to some sort of conclusion that would be somewhere between cautious, mildly cautious, balanced, mildly optimistic, and talk about how that compares to the previous year, which is often incredibly useful to people. That's really the gist of where we go with graduated findings. There have actually been discussions in the UK more broadly about even can we take that further than graduated findings has and talk about quality of earnings and views on things like that more broadly.
That's great. Thank you, Pamela. Angelo, I'm conscious that we didn't give you an opportunity to speak on the last session, so really would love to hear your views on this area. If we don't mean to put you on the spot, but also don't want to lose out on your insights.
No, it's quite all right. I've been respectful of I guess I've been designated an observer, so I didn't want to interrupt. In terms of the auditor reporting standard, I think it's a net positive thing. We're in the process of doing a post-implementation review ourselves. Again, just for the group, I represent the audit regulator here in Canada. So we haven't crystallized views yet in terms of how it can be improved or things like that. But I've certainly been watching the dialogue internationally. And the graduated finding aspect that KPMG has come up with is something that we're watching very carefully.
Thank you. Any comments on that first question? Thank you, Henry. Jump in.
It's not really an area where I got much to add, but just as a periodic, user looking into accounts, I must admit that I have found this a very welcome addition to a set of financial statements. And in particular, I found it on some occasions just fascinating to see that the audit report has communicated information where, that's given me real insights. And that actually, to my mind, in investigating a particular accounting issue in a particular company's account, I would say that it's highlighted question marks almost like about the information that the directors themselves have actually provided in the note. So almost like an interesting perspective that something was a critical audit matter for the auditors and yet seemed not to have the prominence that you might expect given the fact that the auditors say it was a significant area of judgment in the financial statements. And I remember there was one particular case around supplier discounts, and it was very insightful, just that very fact actually.
So sometimes you've actually seen a disconnect in what auditors are considering key audit matters and what management
or apparent. But I guess what it highlights to me is, that it just allows, it's just another set of very interesting information coming out of the financial statements. And I imagine something helpful for the auditors to be able to convey a little bit of that in some cases.
Thank you. YT, you're next, and then Robin.
Key audit matters, I think, are useful, but my observation from this part of the world is that sometimes I wonder is whether there are too few. Quite often you just see a couple of key audit matters. So whether it's just to comply with the accounting, with the expanded auditors report, that auditors are just kind of highlighting a couple of them. And the other thing that I do, the auditors, of course, in terms of the auditor's response, is often we have kind of challenge and question, but you kind of have no idea in terms of what they actually did. To what extent have they kind of exercised professional skepticism when they're looking at those key audit matters? So I do wonder whether, in some countries now, like Australia, right, the auditors are required to attend the AGM and to answer questions, right, from shareholders. I wonder whether there's opportunity for better conversations around what exactly the auditors have done, because reading the auditor's response, often I have no idea in terms of what they've done. They just say they have challenged, but how have they challenged? Yeah, thank you.
Robin?
I just wanted to, I think I'm probably launching into question 2, but we have been speaking about key audit matters, and I'm a big fan of them. I'm a director of CPA Australia as well as being an insolvency practitioner in my own practice, but and sit on our audit and risk committee. And I find from a user perspective, it's really good to have that conversation about what is a key audit matter, and then to ensure that we have the systems and controls in place to adequately address the risk that has been identified as perhaps being the basis for that particular item being addressed, identified as a key audit matter. So I find it useful because it helps sharpen management's and the director's attention. And from an auditor's point of view, I suppose it focuses them on, well, what is important in all of this, and what are the risk items. And it's not necessarily, as we've spoken about already tonight, it's not just about dollar terms, because something that can be absolutely seismic to an organisation doesn't necessarily have to be dollar terms issue.
Great, thank you. I don't have any other hands up here at the moment, so perhaps we've sort of talked about the CAMs a little bit, and YT mentioned as well that perhaps there's maybe it's inconsistency between what you see in terms of numbers in one jurisdiction compared to another. But of course, they are entity specific. So I'm not sure if we would ever get to a point where there could be consistency, but potentially maybe there should be more room for auditors to express more CAMs. And perhaps if we can just do a bit of a deep dive into that point. If anybody, in fact, the practitioner's views on this as well, obviously incredibly important here. Would more CAMs be something that you would like to see? And maybe Henry, when you've been talking about some of the reviews you've been doing and how important they've been and how interesting they've been, is that an area that perhaps we could expand on? I'm not sure how. I'm not saying we should. I'm just, it's just an open thought. Pamela, do jump in.
I'm trying to remember if I have seen evidence of this, but I have a feeling that maybe in the UK we do maybe a couple more than in other locations, but I'm sure there's some analysis out there. I'm not sure that more CAMs is necessarily good, and it does vary enormously by audit as to how many there are and how many there should be. I also think that when one gets down the list of matters, they can be a bit less interesting, and so maybe mask what's going on. It might be worth exploring. What your question prompted in my mind was how you're approaching the risks generally, because there'll be more risks that the audit considers than there will be key audit matters, but maybe some discussion of the risks generally and risk maps and why some things are not CAMs might be a context setting discussion that might be useful. We've done that on a couple of audits.
Yeah, no, that's helpful. So more at the individual firm level. Yeah. Okay. Robin and then Bob.
I don't think there's a magic number for key audit matters. I think it is a case-by-case scenario, and quantity is not necessarily the answer. It's quality and relevance. So to me, I think that's the driver of what is and the number of CAMs.
Bob?
Yeah, and thanks, Josephine. And Pamela said something that really spurred me, and it's a little maybe outside of CAMs, but I think it's related, and that's around this idea of talking more about the risks and how they're identified more generally, because it strikes me even outside of the CAMs is I'm not sure we do a good job of articulating in the auditor's report what reasonable assurance is, other than we say it's high. We say it's not a guarantee that material misstatements will be detected, whether due to fraud or error, and then we go on a little bit later and say, oh, by the way, the chances of detecting fraud are even less than error. And it all comes around to, at the end of the day, I think, and then when you layer in CAMs, the user can be left wondering, well, what didn't rise to the level of a CAM, and why not, and what else was done during the audit. So I think there's a little bit of a hole there, bridging just between some of the descriptions of what an audit is and then how something does rise to the level of a CAM that could be explored a little bit.
Yeah, certainly. Thank you. Angelo, you raised your hand.
Yeah, in terms of the discussion about the quality or quantity of CAMs, I agree that we should be focusing in on the quality for sure. But there's what strikes me as maybe something that could be a staple of the audit report would be some commentary on fraud and what the auditors did to address fraud. And one call-out box that's in the discussion paper that I found particularly interesting is the PwC reference to the Future of Audit report, where the reference here is that, and I'll just quickly read it, some participants suggested that companies should be required to report on the strength of their internal controls with respect to fraud, and the auditors in turn providing assurance on those controls. Now, this is maybe not necessarily a discussion about the CAM, it's really about a discussion about how far the auditor's responsibility extends to, and that's a separate discussion up and above the CAM. But I certainly believe that a staple, given the expectations gap, a staple of the audit report ought to be some commentary around what the auditor has done in the area of fraud.
Yeah, thank you, Angelo. And then I have YT.
Just very quickly, just to respond to Pamela's comment. A few years ago, I was doing something with the local regulator here in Singapore, and one of the issues that was flagged was KAMs. I think they made the observation that on average, I think UK was like, I don't know, on average of 4 or something, Singapore was kind of only 2 or something. There was clearly a difference. So while I agree that it's kind of entity specific, you kind of ask, right, why cross-sectionally across the country you have so much fewer in that sense. And the other thing I think that's lacking in Singapore is you don't have the audit committee commentary. And I mean, except for the, I think in UK, right, audit committees generally comment, right, on the CAMs, right? But in Singapore, it's only some very big companies that are kind of doing that. That's kind of some of what other stakeholders perhaps could be doing a bit more around commenting on the CAMs. Yeah. So I just thought I'll just at that point, yeah.
So maybe what we need is a couple of things there. Some work in the background, perhaps to get a better understanding as to why, if there are in fact fewer CAMs in one jurisdiction than another. But also, to Bob's point, maybe we need to bridge the gap between understanding the scope of the audit and that journey that an auditor takes, given within that scope, to actually disclose CAMs, and something around that would be quite helpful. And then I had Robin, and then Pamela.
I just wanted to support what Robert had said about we need, and this is my paraphrasing, Robert, and I'm probably doing you a great disservice, but there is a lot of fabulous work that auditors do, but I don't think the audit report reflects that. And we need to think about how we can convey that. And having more CAMs is not going to be the answer, because that's just noise. But it's the fact that it hasn't made it into the audit report maybe is a good thing, but we should be trying to explain that we looked. Because it's not there doesn't mean we didn't look. I think that whole, we talk about accountants generally having to be good storytellers. Auditors need to be good telling the story of the audit. I think a bit more work needs to go into that aspect.
Yeah, that's great. Okay, I would like to cover up the potential changes in respect to concern, but Bob, your hand came, I think, and then Pamela, you also raised your hand visibly.
I can be very quick. Just responding to Robin's comment, I think, something about telling the story, one thing that I've always found interesting is that the auditor's report and communications with those charged with governance, so on and so forth, always focus on areas where there were problems, the audit detected something, weaknesses in internal control and things like that. But I've always thought it would be interesting if there was some sort of communication about all of the misstatements that were actually detected by auditors and corrected, so that users were never faced with having potential misstatements in their financial statements. And I think maybe someday we'll get to that, but that's probably a ways off into the future.
Thank you. Pamela?
Yes, very quick point that when we're talking about how the audit's been approached and bridging that gap generally, one thing that we're hearing quite consistently from users is they want to know how the auditors address climate change and ESG factors in an audit, which doesn't always mean a CAM, depending on the entity, and that might be a way to bring that through.
Yes, and actually there's a staff alert coming out on climate risk, Pamela, that the IAASB have produced on auditors' responsibilities and thinking what more can be done in that area, just as a quick plug there. So let's go on to the topic of going concern, and maybe we've got about 12 minutes. We can squish those A, B and C's in there, but basically does the work that we've done in respect to enhance the disclosures in respect of going concern, are they an improvement, are they welcome, and what additional information would be useful to users, obviously from your perspective as practitioners as well, in this area? So over to you, whoever would like to kick us off. Has it been you? Have you heard that it's useful? Are there concerns at all about what gets disclosed?
What I will throw in is that I personally am of the opinion that anything in audit reports that describes general audit responsibilities is not helpful. It is immediately boilerplate, obscures other things, and I think if you've got to repeat something in every single audit report, that says to me that something broader needs to happen to articulate centrally somehow what an audit does. Anything that's specific to the audit itself, I think, is helpful.
Which is why the CAMs have been so well received, because they are very specific to the entity. YT?
Yeah, just just now this comment about kind of like crystal ball, right? I want to point out that actually from where I'm looking, there are many companies, even though just now we talk about you're looking 12 months ahead, right? Whether it's 12 months from the balance date or 12 months from the director's report. But I think that my observation is that there are many companies that collapse after a clean opinion within less than 12 months, within 3-6 months. So we are not really talking about crystal ball. In some cases, you kind of have to wonder. We have quite a number of private company collapses, big private companies, and a couple of listed companies. It's 3-6 months after the year end, they collapse. So I just want to bring it back that, we are not, I don't think we are being unrealistic to say that we expect the auditors to forecast something 12 months or 18 months or 18 months or 2 years ahead. I'm saying that there are many collapses that are observed, which are very, very soon after the year end. So that's something to bear in mind. Yeah.
I mean, on that point though, just not sort of as a side point from that, is there, and not thinking so much about the forecasting ahead, but the auditors' work and what they do, is there a desire for more on the actual procedures that the auditors perform in relation to going concern?
So I have some specific examples I've seen where perhaps the auditor rely on a guarantee from a parent or a guarantee from some major shareholder, which turns out to be non-substantive. In other words, the major shareholder doesn't have the financial resources, the parent company doesn't have the financial resources. So the question is whether sometimes auditors are too readily accepting whatever management is telling them in terms of we got this guarantee that's coming, and do they assess how robust is that guarantee? I think that's why sometimes you see these companies falling over pretty quickly after the year end.
Yeah, so that's quite useful to our work and to inform us on what we might do differently in terms of auditors' work ongoing concern. But in terms of disclosures in the actual financial statements, is there a desire for more information on the procedures that auditors perform in respect of going concern? Are we looking for, potentially being controversial, are we looking for a going concern CAM, as others have mentioned, a fraud CAM, for example? Any thoughts there?
Josephine, maybe just quickly, I think, you know, when CAMs were first discussed, and as we've heard them come out, I think one of the popular discussions was around the use of them for the quote unquote close calls. And I do think that auditors at times, with respect to going concern, they are looking at that time period subsequent to whether it's, you know, 1 year from the date they're available to be issued or issued, depending on that point's been made separately. But I do think, in YT, maybe to that point around, you know, the guarantees and things like that, auditors, I think, oftentimes have insights that perhaps the company can make it for whatever the defined period is, but not without declines in performance and possible injury in share price and things like that, as the users, as the investors watch that company slowly decline over a year. So I think better disclosure around some of the underlying factors, even if you didn't conclude that substantial doubt was present, more disclosure around negative trends or whatever it may be that really caused you more time would be beneficial.
Bob, you're talking about that from management's perspective.
Yes, but you know, I've always said the auditor's responsibilities are tied so closely to management's, because you audit to make sure that management is making the disclosures that they should be in the first place. So I've always thought that auditors should be almost reperforming, I guess would be one way to look at it, management's work. And perhaps in the absence of adequate management disclosures, perhaps the auditor should be using CAMs or other vehicles to make those communications.
Okay, thank you. Henry?
I just asked Bob, but was that looking for more disclosure actually in the financial statements? And so, you know, which you do hear, as I said earlier on, from some people looking, sort of think that the bar when disclosure is currently tripped is too high, and looking for more meaningful insights, if you like, into the gross risk before your mitigating activities, so that you get a more comprehensive picture of that risk to help better appreciate the understanding of the going concern assessment. But then, you know, it was interesting what Martin said in the first session about, you know, you've got to find the right balance here. It's a difficult one. But then that to me would also sort of say, I'd be thinking about something that came up in the discussion earlier, the difficulty about this always becoming a regular part of audit reporting. It presumably wants to be something when, you know, when you've reached a particular tipping point in the risk, perhaps before, you know, you start to have specific disclosure around it.
I think Bob's nodding yes.
Yeah, I was going to say maybe to respond to that very quickly, Henry. Yes, I think there's too many times that the assessment is made as to answer the question, is there substantial doubt or not? And if the answer is no, then people kind of dust their hands off and think, I'm done with that. And I think, you know, it's a tricky balance, because I also sometimes get concerned that the auditors and even management sometimes are crossing over into analyst roles. I mean, what is the analyst role? Is to work with good information and make recommendations and assessments and things like that too. So it's all part of the big ecosystem. And we have to figure out who has respective roles and what the extent of those roles are.
So maybe there's a bit of, it's not articulated very well, but maybe with this, that we could enhance reporting in this area, but there may be that need for better disclosures by management first, because then when management make those disclosures, then auditors' procedures and reporting on those in the auditor's report would then follow. And I think that's a fair assessment of what has been discussed now. We have 3 minutes for number 9. We've already got some points on number 9, but on your wish list of things you would like to see in the auditor's report, is there anything else you'd like to see that we haven't already discussed? I'm sure there are, but only a little bit of time to talk about it. What else do our participants want to see in auditors' reports?
So we've been thinking about and exploring to what extent we can include extra things that we hear would be in demand, things like comments on the effectiveness of the audit committee, or things to do with the balance of the front end, or going back to the Bryden report in the UK as well, that talks about key performance indicators as they're disclosed in the front end. So a lot of the sort of things that we're thinking about, can we put in audit reports or not? And we haven't concluded on any of that. It actually links to what are the responsibilities of an auditor at all. So I think it's a much broader question as to what else you could put into audit reports, but I think it's a valid one.
Yeah, no, I agree. That's great. So we have 1 minute and 30 seconds left. Is there anything else anybody wants to add before we close this session in this mad rush? Go back to the break and then the debrief. No, you're probably all shattered after having to get up and run through this process. Okay, well, thank you very much. Again, really rich discussions. Again, I'm sure we could talk about this for hours, but I'll give you a minute back and I'll see you on the other side. Thanks, everyone.